Hello everyone and welcome to another Millennial Money Mike video. As the markets are closed yesterday to celebrate the birthday of MLK, I thought it'd be a good time to go through what my investment portfolio looks like for 2021 and how it performed in 2020. Every month I'll give an update video that goes over different portfolio changes and how the portfolio is performing. I'd also like to say that this is in no way financial advice, it is just my personal opinion. So let's get started. 2020 was a hectic and challenging time for the financial markets. However, due to optimism about the economy's recovery, unprecedented government stimulus, and a Federal Reserve that vows against raising interest rates, it was also an incredibly lucrative time to be invested. With strong savings and discretionary income numbers during the pandemic, combined with brokerages making it easier than ever to start investing, it was a record-breaking year for investment account openings as well. The market catapulted back from March lows and continues the longest bull run in American history. So with this fantastic year of returns, let's see how I fared. In 2020, I experimented with a variety of different brokerages to find the one that best fit my investment preferences, and in doing so, opened accounts at M1 Finance, Robinhood, and TD Ameritrade, yet found Fidelity to be my favorite. I find their website to be very informative, yet simplistic, and their recent update that allows for fractional share ownership is a big reason why my entire portfolio is at Fidelity. Also, when I need assistance, Fidelity has fantastic customer service, unlike many of the other virtual brokerages like Robinhood that are truly lacking in that regard. Also, Fidelity allows you to have multiple investment accounts, which allows me to better organize my investments. My investment portfolio is broken up into 4 parts. The first I refer to as my baseline, which makes up about 30% of my portfolio. The second is growth, which takes up a majority of my portfolio at 60%. The third is devoted to high dividend companies and accounts for around 5%. The remaining 5% is considered to be my YOLO money, and that's reserved only for high risk, high reward type trades. The goal of the baseline portion of my portfolio is to track the overall stock market and be something that I consistently put money into. This portion of my portfolio doesn't require much of any time for research, as I always invest in the same ETF. This ETF is ticker symbol VTI and is the Vanguard Total Stock Market ETF. Just like the name suggests, the ETF tracks the entire stock market, including all the companies in the S&P 500, Dow, and NASDAQ. The ETF has 3,587 holdings and is weighted in terms of market cap. In 2020, this ETF returned 21.03% and had a 1.75 dividend yield. The expense ratio for VTI is also extremely low at 0.03. Here you can see how VTI compared to other ETFs that track the S&P 500, NASDAQ, and Dow. Here's a quick view of the top 10 holdings of VTI. The growth portion, or a more accurate name would be the aggressive growth portion of my account, has the goal of outperforming my baseline portfolio and other broader indexes. Its top 3 holdings are all ETFs, yet 14 of the 19 holdings are single stocks. In 2020, this portion of my portfolio was able to return around 101% and had a dividend yield of 0.767. Below are all 17 holdings and what percentage they make up of the growth portion of this portfolio. As you can see, highlighted are all the ETFs that account for around 50% of the holdings. My logic behind this is to limit my single stock risk and also to invest in secular trends that I believe have great potential growth. For example, my second largest holding is OGIG, which is an ETF that includes companies that derive most of their revenue from online e-commerce, which is a trend that I don't see slowing down. Stocks in this ETF include Amazon, Alibaba, and Shopify. OGIG returned 107.22% in 2020. In terms of individual stocks, I try to buy companies that I understand how they make revenue currently and can put together a logical story for how they're going to make revenue in the future. For example, as a frequent customer of Chipotle, I know that they're a food chain that, due to investments in technology, was pretty well set up for the pandemic. I understand how they make their money and have no plans to stop eating there anytime soon. In 2020, Chipotle returned 60.29%. If you want me to have a video that goes into detail about all of the holdings, especially in this growth portion of the portfolio, I'd be happy to make that. So just let me know down in the comments if you'd like to see that. Representing 5% of my portfolio are companies and ETFs that pay a high dividend. The goal here is to build up slowly a dividend income stream that I can eventually use to pay for at least part of my living expenses. In 2020, this portfolio returned around 6.67% and had a dividend yield of 3.82. Lastly, I dedicated 5% of my portfolio to what I like to call YOLO trades. For this portion of the portfolio, I have an extremely high risk appetite. My only trade in 2020 was in late November, where I bought a new SPAC IPO called QuantumScape, which I consider to be the ultimate 2020 stock. It is a pre-revenue electric car battery company that has a few solid backers like VW and Bill Gates. I had no intention of holding the stock for too long and was lucky enough to sell it right at its peak in late December. The stock has fallen significantly since then and shows why I only dedicate a small portion of my portfolio to these high-risk trades. But in that short period of time, I was able to return 129.69%. In summary, my portfolio returned about 73.73% in 2020, which I can't complain about at all. I want to hear your feedback and thoughts on my portfolio and what type of information you want to see in any kind of upcoming portfolio videos. If you have any questions, I'd love to hear them in the comments, and I hope you have a great week.